moving on to our first speaker of the day, Mr. Nishad Khanolkar.
One second. Ms. Yuvashri, please come on stage to honor the speaker. Mr. Nishad, please.
Mr. Nishad Khanolkar, he is the founder and director of the Wealth Company. He is an astute leader in finance industry with over 2 decades of experience in asset management, investment banking, private equity, mergers and acquisitions, and investment management. He is a chartered accountant 2002 and associate member of CPA Australia, having rich 24 years of experience in the field of fund management, covering fundraising, fund distribution, investment origination, portfolio management, investor relations, transaction execution, and exit. Previously, he was the CEO of Hong Kong-based private equity fund SP Growth Partners, which was managed by Silverdale Group. He was the director of his global investee companies from Australia and Hong Kong. He has been instrumental in both conceptualization and launch of the 3 SEBI-registered CAT2 funds, most popularly known as Bharat Value Fund, managed by the Wealth Company, Asset Management Private Limited. Under his wings, Series 1 has corpus of 500 crores, Series 2 has a corpus of 2,000 crores, and Series 3 with corpus of 2,500 crores. Over to you, sir.
Thank you very much. So I guess the tougher topic came at the first. So my agenda is very simple. And the agenda is, of course, mutual fund to sahi hai. Mutual fund is perfect. Any doubt about that? No, do not have that. Very simple. So mutual fund is perfect. But is there a life beyond mutual fund? Or there is not a life beyond mutual fund? That's the agenda for me. So I hope you guys like the agenda. So what I'm going to do is, keep it very simple. The first question I'm going to answer, when I came here, one good MFD asked me a question. Sir, I'm doing extremely well as a mutual fund distributor. Extremely means extremely well. I'm planning to buy a Mercedes in next 3 months. So why should I get into alternates? I think the question is good to take at the first question. The answer is very simple. The numbers stand out. The numbers stand out. See, the mutual fund industry has become, correct me if I'm wrong, close to 80 lakhs crore in some 60 years, correct? 83, excellent, sir. And who's of India is advertising this? Sachin Tendulkar, entire Indian cricket team is advertising the mutual fund. There is no doubt about that. Every day, I at least see 15 ads of mutual fund. So there's a 83 lakhs in 60 years. Any guess how big is the AIF industry? 15 lakh crore, exactly right. 15 lakh crore is in how many years? Trust me, practically in 4 years. Before Corona, even I was not knowing the full form of AIF. So it is one industry who has gone 80 lakhs crore in 60 years with so much advertisement. And has any one of you seen even a single advertisement of AIF? No. Without even an advertisement, if somebody is touching so fast, then guys, you need to seriously look into this. I have a simple suggestion. Look at my fund. I started my AIF exactly 4 years ago with zero AUM and no background. Today, close to 11,000 crore in 4 years because of AIF, 3,450 investors. Why I came here? Simple answer. When I saw almost 9% of my fund, which is close to 750 crore, has come from Chennai. AIF I'm talking about. I'm not talking about the mutual fund. When I saw the distributors, not too many distributors were there. So I thought like somewhere I failed in giving an awareness or giving an education or importance or explaining the importance about the AIF to you guys. So I came ahead to bridge that gap so that you guys get educated and you guys get awareness about the AIF. So I request you guys also come little bit ahead so that we can literally taste the fruit of AIF. So that's my basic agenda. I'm not going to complicate. I'm not going to give you too many slides, too many data points. Even I do not understand that sometimes. So my simple agenda is, right now it is something like 9:20. Simple agenda is at 9:50 when I end my presentation. Who you guys are? You guys are mutual fund distributors, correct? You all see a cricket match. So there is a batsman and there is a umpire. In my opinion, all the fund managers who are going to speak today, we are players. You guys are umpires. You should know how to catch the players. Trust me, no fund manager will tell you. Most of us will agree with me sitting in the first row. We are the masters of disguising you. You see the football nowadays? The player falls and start making noise as if something has happened to him. The moment umpire gives the red card, he stands up and start walking. So we are those players. Your job is to catch us. So what is your job? Do not try to become the fund manager. Sorry, friends. Do not try to become the fund managers. You should know how to catch the fund manager. So my simple question to you is that I run a Cat 2 AF, which is mainly an unlisted industry. So agenda is at 9:50. Anyone living from this home, including my good friend who's taking my photos, should be in a position to catch how to select a Cat 2 AF. The agenda is good. Any person coming and telling you anything about the unlisted industry, you should be in a position to catch them. Do not try to become the fund manager. Be in a position to catch a fund manager. I think this is slightly different. Nobody speaks about that. Normally, fund managers come and talk about my selection criteria is this, my performance is this, my performance that. No, nothing like that sort. I'm not going to market anything. I'm getting easy money in my fund. I'm not going to market. My simple agenda is at 9:50, you guys should be in a position to catch whether the Cat 2 fund manager, that is unlisted fund manager, sorry to use a bad word, is bluffing or he's true. Correct? Good agenda is good. At least raise your hands. I understand something. Thank you very much. So friends, what I told you, who are you guys? Umpires. Not the Virat Kohli. You guys are umpires. So when a third umpire, a decision goes to him, he asks 3 questions. Which are those 3 questions? Pitched in line, impact in line, hitting stump wicket. If 3 reds, 3 green are there, he gives you out. If 3 greens are not there, he gives you not out. Very simple. So you guys are umpire. So henceforth, any fund manager from Cat 2F, which is unlisted, coming and approaching you after 9:50 AM, you guys need to ask him 3 questions. How many questions? 3 questions. First question, I'm not joking. Though I'm going to tell you in a funny way, this is where the issue is. So if you understand these questions, you are done. First question, you all agree? If you Google it, if you chat GPT it, most of the people say unlisted has a tendency of giving, or the probability of giving better return than the listed. Only reason because unlisted is not so easily available, listed is easily available. The statement is correct, but I think it is partially correct. The probability of unlisted giving you better return increases, write it down, provided the fund manager knows how to make an exit. Because if you exit, the money comes to your bank account. If you fail to exit, that's a paper return, and that paper and the tissue paper we used just now at the breakfast has the same one and the same value. So the first question you want to ask any unlisted fund manager is, my dear brother, how many exits you have done in your life? Got the question very clearly? You have to ask him 3 questions. Trust me, 70% of the population will run away. The first question is, how many exits you have shown in your life? Because if you exit, the money comes to your bank account. If you fail to exit, money does not come to your bank account. It's not so easy. If you ask me, if I'm a personal investor, if a fund manager comes to me and tells me, sir, I have done 15 exits, out of which 7 were at losses, I would give him my money. 15 exits, out of which 7 are losses, I'll give him my money because he knows how to make an exit. See, this is like a chakravyuha. Unlisted is like a chakravyuha. Many people can enter, but very few can exit. So the first question, trust me, if you ask this question to a fund manager, 70% will either get angry, they will leave the presentation, they'll tell you, deviate the topics, start showing the past performances, start showing many other slides, but they'll not talk about the exits. So the first question you need to ask him, how many exits you have done? Just to answer the question, I have done 119 exits in last 13 years. That's probably the highest. Because that's where my group comes to the picture, Pentomet Group, who has done 119 IPOs. So we have the track record of exits in unlisted to listed. I'm not talking about listed to listed exits. I'm talking about entering into unlisted and exiting in listed. So we have demonstrated that. So that's rule number 1, how many exits you have done. Very clear? The second question, you can say loudly yes, no problem. You have paid money for hearing me, so you can say loudly yes. At least I come to know. Yes or no? Thank you. That's the way. The second question, in a very funny way, I'm going to tell you. What the fund manager comes and tell you, pardon me, all guys in the first row, you guys are fund manager, nothing wrong against you, but I'm talking about unlisted. and I will increase your valuation, correct? I'll increase your valuation. I'll enter company at 5,000 crore valuation and I will exit at 10,000 crore. I'll enter at 2,000 crore. I'll enter at 7,000 crore. This is the precise presentation they give you, correct? That is what they happen. So write it down. The second rule is valuations are like girlfriends. Valuations are like girlfriend. They will never get it. Raise the hand who has got the girlfriend. Sir, not even one guy has raised the hand. Huh? Point to be noted. You have got a girlfriend, you're very lucky. She is your wife now, correct? No, very lucky. So valuations are, see, one in 100. 1 in 100, probably 1 in 300. So valuations are girlfriend, never chase the valuations. You are not going to get it. Friends, you need to ask the fund manager. And you never ask this question because I have been grilled by more than 500 mutual fund distributors, but nobody has asked me the question. You ask me about the past performance, but ask me how I have given that. So you need to ask him, how are you going to increase the valuation of your company? It's not a joke. The major issue of Indian unlisted companies are sitting in this particular point. The first point has probably 50% issue. The second point has close to 30% issues. How are you going to increase the valuations of your company? So to increase the valuation, what you need to do, tell me one thing. You need to increase only one thing, that is called as the balance sheet size of the company. Means what? Increase revenue, increase margins, increase profitability, maybe even appoint new CEO, appoint new CFO, get some new contracts, enter the new territory. This is what you need to do. Now to do this is a very important point. If you do this, the balance sheet size increases. If the balance sheet size increases, by default, the valuation also increases. But to do this, you need to invest primary money into the company. That is growth capital. See, listed, you do not have option. That's why most of the time fund managers indulge into secondary. But in unlisted, you definitely have a primary option. Now you put your hand on your chest and tell me how many times a fund manager come and give a growth capital to the company. What I see is 70 to 80% of the Indian unlisted companies are trading into the secondary trading, means they are chasing the valuations. If you are doing the secondary, we are exchanging amongst each other. I am selling it to you, my shares. You guys are selling it to you. You guys are selling it to you. The promoter who is running the company, he is telling you, sorry sir, I did not get any money. How do I increase the balance sheet size of the company? Means what are we doing? We are chasing girlfriends. We are not chasing the balance sheet size. Balance sheet size is your home. In a simple way, if you do secondary, the guy whom you are giving the money, he gets the BMW. He gets the Audi, he gets the Mercedes. But if you do the primary, your company's balance sheet size will go up. If the balance sheet size goes up, irrespective of the Trump, the valuation will go up. Agreed? The balance sheet, yes or no? Thank you very much. So second point is never chase girlfriends. Ask fund manager, how are you increasing the balance sheet size of the company? It's not only about the giving vitamin A. There are things you need to do beyond that also. You need to support the promoter in various other ways. He is not a god who can do everything. So that's point number 2. And point number 3, last point. So first point, 50% out. Second point, 30% out. Last point is very important. What our mother used to say? Never bet on a horse. Correct? Yes or no? North India तो ये बोलते थे. I think South India also must be saying never bet on a horse. Horse betting is very bad. Horse betting is very bad. So don't bet on the horse, na. But can you bet on a jockey? Mother has said no. Never said no that you cannot bet on a jockey. So bet on a jockey, never bet on a horse. What does this mean? It's very simple. In India, this is the fundamental mistake people do. In India, tell me one thing. Who runs the company? Fund manager or promoters? Absolutely right. Then why you take the photos of fund manager, my dear friend? Stop taking the photos of fund manager. We are just the medians. Stop taking our photos. Absolutely right. In India, promoters run the company. Sir, if you answered correctly, then ask the fund manager. Your mother has said very nicely, never bet on a horse, bet on a jockey. Jockey is like a promoter. So ask fund manager, whatever companies you have invested, what is the average shareholding of the promoter? Sir, it will be okay. I was a speaker at a CA Institute. Lot of debate happens over why IPO fails, how IPO fails. After working in this industry for almost 24 years, I tried to convince them. They were not getting convinced. So I said, forget everything. Keep the rule book apart. Take a pen and paper. Draw a line. This side, failed IPO. This side, past IPO. Very simple. left side failed IPO, right side past IPO. Take any 30, 40 samples. Take any 30, 40 samples and just do one thing. If the failed IPO is here, write down here. Past IPO is here, write down here. What you need to write down, not the names. Just on the date of IPO, what was the shareholding of the promoter? Very simple. On the date of the IPO, if this is failed IPO, write down the promoter shareholding on left side. If this is a past IPO, write down the promoter shareholding on the right side. If you take the average of left side, trust me friends, it will be less than 20%. And if you take the average of right side, trust me friends, it will be more than 40%. So that shows who runs the company. Again, to answer your question, promoter. So ask the fund manager, whatever companies you have invested, what is the average shareholding of the promoter? And you know with whom to go. If the average is less than 30, 40%, you know what is going to happen eventually. And if the average is more than 50%, you know what is going to happen. Ask me, I have deployed close to 6,000 crore. My average is close to 71%. My average, thank you, you can clap, sir. You want full return, na? So I want full claps. Return, everybody understands the power of money. Everybody understands the power of money. It's like simple. Fund managers do secondary and give money to the promoter. So it's simple. Promoter is going out, you are entering. Means from a horse cart, jockey is getting down and you guys are entering. After that, the accident happened. Sorry friends, promoter and fund manager cannot be blamed. We guys are to be blamed. So very simple. 3 questions you guys to ask to understand. Don't try to become the fund manager. What is the selection parameter? What is the past performance? I could have ended the presentation in 2 minutes saying my past performance is excess of 35% in all 3 series across categories. But no, I don't want to get into that. I don't want to just say that 35% is my gross error. That does not mean next time I'll get 35%. It's impossible. May not be possible. Impossible is wrong, but may not be possible. But what I taught you is 3 questions you need to ask because you guys are umpires. Trust me, I again repeat, we fund managers are the master of disguising you. You'll never come to know. Don't try to catch us. Don't try to come into our shoes. You cannot. What I can tell you is how to catch us. You need to know how to catch us. Umpires can never do the batting. Umpires can never play the penalty kick. But he knows where the Messi is committing the fraud. So 3 questions you need to ask the unlisted fund manager is, number 1, my dear friend, how many exits you have done, okay? Number 2, my dear friend, are you doing primary or secondary? Remember girlfriend. And number 3, are you following the promoter or you are not following the promoter? What is the average holding of the promoter? Remember, wherever the history says, wherever it is less than 20%, ultimately it will become difficult to exit. And wherever this is more than 50, 60%, it will be very, 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 very easy to exit. So, have you become the umpires of category 2F? Yes or no? Yes or no? Very clear? Category 1 will be slightly different, so I'm not touching that. Category 3 will be very different because category 3 is like an advanced mutual fund. The timer is not there. Can somebody tell me how much time I have so accordingly I can get into 5-10 minutes are there? Thank you. So one topic I want to touch it. Again, coming back to the first question which the organizer asked me that many distributors are here. Come back to the same distributor who said, I'm going to buy the Mercedes in next 2 months. I already booked it. And only by selling mutual fund, why should I get into the AIF? So let's once again touch back to the same point. See, I have seen one thing. I'll give you my personal experience. You take a lot of effort on a particular client from maybe start, where he starts his journey. Over a period of time, you keep on suggesting him various options and this and that. And his journey also increases and accordingly your journey also increases. So eventually when he grows, I have always seen moment somebody's liquid AUM means mutual fund and PMS AUM goes somewhere around 6, 7, 8 crore rupees, which is a very easy thing nowadays, not a big trouble. He takes one dip into AF. This is my home experience. Huh? My wife is a chartered accountant who used to manage my personal money. I have never got into this. She used to give money to our personal financial guy. Few years ago, my wife took one dip into AF. I asked my financial consultant, Joshi uncle I used to call him, Kaka bolte in Marathi we call it Kaka. Why did you allow my wife to take one dip into AIF? It was a marriage and he's gave me a very nice answer. Forget it beta. 1 crore has gone na. The rest 6, 7 is with me. The answer is very simple. 1 has gone, the rest 6, 7 is with me. My wife got a fantastic return over there. Trust me, the AUM has gone phenomenally high in last 4, 5 years. Today, Joshi Kaka has only 25 lakhs. Only 25 lakhs. Why? So if you are thinking The basic mistake, because Joshi Kaka was not aware about the 3 golden rules I told you. Had I told him that time, probably today Joshi Kaka would have started his retirement journey also, only based on my AUM. So what happened? Again, coming back to your example, since if you are not aware, do not think that you can tell your investor, stay mutual fund, stay mutual fund, stay mutual fund, even though mutual funds are giving return. Rest assured, somebody else is also telling him, sir, 1 crore in AF, sir, 1 crore in AF, sir, 1 crore in AF. Somewhere he will get tempted. Somewhere he will get tempted. And if that 1 crore goes, do not be under the impression only 1 has gone, 6 is with me, take it from me. In next 3 years, everything will go. The live example is in front of you. I am giving my personal experience. I am not giving you anybody else's. So better learn AIF very quickly. I am coming to your way. So that's what I'm telling you. Every week we hold 2 webinars. How many webinars? Every week we hold 2 webinars. I said I'm not going to show you any presentation, but if possible, just take one photo. What you need to do, this is not a marketing presentation. The webinar speaks only about the AIF. Just take the photo, you will find the website, you will find the WhatsApp of our key people. Just tell them that I heard Nishad. Please, please, please send me the link of the next webinar. You need to hear 4 webinars. Probably I have educated you 50-60%. I cannot educate you 100% in a one show. But if you listen 4 webinars along with your girlfriends also, trust me, you guys can give a better presentation than me. So that is the only slide I want to flash here. I'm going to stay on that slide for maybe 2 minutes. That's the building from where we operate the entire building. See, 4 years ago when we started AF journey, we had an office of this size. We had an office of this size, 6 employees 4 years ago. 4 years ago, office of this size, 6 employees, 0 AUM. Today, 11,000 crore AUM. This entire building in Mumbai owned by us and 650 employees, all because of AIF. Thank you very much, sir. यहाँ आगे नहीं जाता है. बस इसका फोटो ले लो. कुछ नहीं करना है. Just tell them, do not scan it. I'm going to stand on this slide for 2 minutes. Just tell them, send me the link of next webinar. Please hear 4 or 5 times. You do any AF. I'm not fussy about doing my AF. You do any AF. There are various AFs in the world. But at least you guys will get educated on AF. That is my best thing that I can give to this industry, because I do not want to make the second Joshi Kaka in this auditorium. If that happens, it's my failure. I'm not a marketing guy. I'm a fund manager. I'm not a marketing guy. So I can't market. But this is what my CBO has asked me. So this, just attend 4 or 5 webinars and you will be the, trust me, 5th time you can give the better presentation than me. So coming back to the same topic again. Sir, 10 minutes, 5 minutes are there? Thank you, 5 minutes. So second topic, organizers asked me to speak about is SF. I'm not the fund manager for SF, but being the director of the company, I get into a lot of discussion with Chinmay Sathe. He's one of the best brain. He was earlier managing the personal money of Birlas. So, like I told you why you need to do the AF. I'm telling you why you need to do the SF. So I have a very large distributor from this area. I asked him to come today, but unfortunately he's not here. So when my SIF came, he asked me a simple question. This is about perception, okay? This is all about perception. That Mr. Nishad, are you going to, he calls me every month just to check the fund manager is alive or not, because he has given me a big money. So he asked me, Mr. Nishad, are you going to invest your personal money into SIF? The answer was yes. He said, what do you expect? I said, sir, flexi ka return. He said, that's where you make the mistake. I said, how come, sir? He said, no. He said, you passed out CA in 2002. Last 24 years, you have managed equity fund internationally and in India. Have you invested personal money into debt? I said, yes. He said, last 24 years, equity has given this return and debt has given this return. I'm bending down. This is the history. Then why are you investing your personal money into debt? Even if it is 5, 10, 15%, why? I said, answer was simple, sir. Donald Trump, this and that, safety, security, delta, beta, all those. He said, exactly. So the way you look at it, it's all about perception. And that fund manager, that distributor is my largest distributor from Chennai. He said, it's perception. You do not look debt as a competing product to equity. You look at debt as a compensatory product to equity. Whenever equity is not performing, at least debt will give you. And you do not know when equity is going to perform, when debt is going to perform. So you have done 80-20 or 85-15. I said, theoretically, yes, sir. Then why are you looking that SIF is a competing product to Flexi? Because SIFs are going to perform when the volatility is higher, and Flexi is going to perform when the volatility is less. Classic example, when the Mr. Donald Trump started during the time terms, look at the India's average Flexi has fallen, which is obvious, by close to 11%. And India's average SIF has fallen by 3%. So in this volatile market, SIF have given a NIM of close to 6 to 7%. I'm talking about the average. Correct? Agreed? Yes or no? All agreed? So what happened? When the volatility happens, SIF gives you the return. When the volatility ends, Flexi gives the return. Now, do you know, can you read the mind of Mr. Donald Trump? Friday morning he was going to sign. Friday evening he said, I'm not going to sign. You cannot read the mind of Donald Trump. So when you do not know when the volatility is going to come, why are you taking the risk? So simple way, the way you do 80-20 in debt and equity, same way do 80-20, 70-30 into Flexi and SIF. When the volatility is there, they will give you the return. When the volatility is not there, Flexi will give you the return. Simple, because that is exactly how it will happen. So you need to basically have the balance between Flexi and SIF. Don't be under the impression when the market goes up, SIF does not have the shorting option. No, it does have. I'll ask you a simple question. Last 15 years, I have done the analysis. Daily basis. You know, on daily basis, how many stocks are positive, how many stocks are red? Nifty 500. 51% stocks are red. So on daily basis, SIF fund manager has a shorting option. Most of the people think that SIF fund manager does not have the shorting option when the market goes up. All the fund managers coming here today will talk about betting the Nifty, betting the benchmark. So my question is, last 15 years, how many companies on a daily basis have beaten the benchmark? Any idea? Only 47%. Means on daily basis, SIF fund manager has a 53% option. So again, whether Flexi will perform, whether SIF will perform, who will give better return, don't get into this nonsense. Simple, the way you bifurcate between debt, equity based on your age, same way if you try to do debt and Flexi and SIF, because what I see, those who are technically sound, okay, I personally see that SIF will have the beta of BAF and return of Flexi. So basically, BAF की आपको risk of BAF, I would say, keep it very simple. The risk of BAF and the return of Flexi, if you want, with a lower risk, then SIF is the product. I told you very clearly, I removed the air. Most of the people think that in a growing market, SIF fund manager cannot short. No, he does have the option. I have seen that. Very simple. And next thing, in mutual fund, you talk about the power of compounding. Every mutual fund distributor talks about the same. In next 4 to 5 years, trust me, in SIF, what you are going to witness is the power of compounding taxation. Simple example, two guys do the derivative. One SIF guy, one non-SIF guy, same instrument, in 1 year, both become double. 100 become 200, this guy become 100 become 200. The non-SIF guy has to pay 40% taxes. In next year, he has a deployable surplus of 160. Whereas SIF fund manager can deploy entire 200. Next year, again that happened. Both same instrument, both made double. 200 became 400 in SIF. The non-SIF guy, 160 became 320. After paying taxes, it comes to 280. Now it is 280 versus 400. Go to home, do this 4 times, 40% taxation. You can see the huge difference coming in your way. So this guy, SIF, are going to show you, like mutual fund have shown you, a compounding effect over a period of time. The SIF is going to show the same compounding effect of taxation over a period of time, because it is not a matter of 12% taxation, it is a matter of 40% taxation in derivatives, which is very huge. Go to home and do the simple mathematics on Excel. Both guys are doubling. One guy is paying 40% tax and other guy is not paying 40% tax. The return goes phenomenally high. That's why, again, as I said, once your guys, investors AUM touches 6-7 crore, he takes a dip into AF. Trust me, I have 3,450 investors in my AF. Minimum ticket size 1 crore, maximum ticket size 100 crore. I know 80% of them by first name. What I've seen is 75 to 80% of them have taken a dip into SIF. 70% of the big guys. So, like I said, in AF, once the AUM goes 6-7 crore, the investor takes one dip into AF. Same way in SIF, once his liquid AUM starts going 70-80 lakhs, the guy will take one dip into SIF. Now the question is, you can do or you cannot do. If you cannot do, guy will do with you. If you cannot do, they will do with them. If they cannot do, they'll do with somebody else. So get educated on all the platforms. Ultimately, it's an ecosystem you have to develop. You cannot say no. So with this, Thanks a lot. Thanks a lot for the time. I hope I have not bored you. Thank you very much.
Thank you, Mr. Nishad. Please be on the stage. Yeah, you can. So, to honor Mr. Nishad, I will call upon Mr. Subramaniam from Tirunelveli. Please.